Hey, everybody, it's Doug Shoemaker here with the Shoemaker Loan Team at Homestead Financial Mortgage. And welcome to 1 Minute Monday, where each week I'm going to do my best to take the top mortgage and housing news and deliver it to my friends that just want to know what time it is in 1 minute or less. Then, for my friends that like to know how to be the clock, I'm going to dig a little bit deeper so that everybody gets the data they want the way they consume it best. So let's go ahead and get started with our very first 1 Minute Monday. So consumer inflation, it cooled again in September. It was up just 0.3% for the month and about 3% year over year. A core inflation, which kind of cuts out food and energy, it rose by 0.2%. And that's keeping the Fed cautiously optimistic. And markets are betting on another quarter point rate cut at the end of the week with the Fed's next meeting. Existing home sales rose 1.5% in September and are about 4.1% higher than they were last year. Inventory climbed to, listen to this, a 5 year high of 1.55 million units. Now, that is still far below pre COVID levels. So, no, this market isn't 2008 2.0. But average rates right now per Mortgage News Daily, you've got your conventional 30 year was 6.19, the 15-year was 5.76, FHA's 30 was 5.95, and VA's 30-year fixed rate was 5.96. Everybody remember, these are national averages. These may or may not be your rate. Reach out today so you can see how easy it is to find out what your personal rate would be based on all the different criteria that's used to determine that. I'll take care of you in every which way that I can. Now, this week is going to bring the Case-Shiller Home Price Index, the pending home sales, and of course, the Fed's rate decision. And just important, or maybe more important, their press conference is going to come Wednesday afternoon. And that could be the start of something beautiful when it comes to mortgage rates. Well, friends, that is our 1 Minute Monday, and you are now free to move about the cabin, unless you're a clock builder and want to know all the details. So, for my clock builders, let's go ahead and dive in. September's report shows inflation finally starting to play nice. Headline Consumer Price Index, or CPI, it came in cooler, like I said, at 0.3% and 3% year over year. Now, core CPI, excluding that food and energy, it did tick up 0.2% and 3% annualized. Now, that matters because the Fed's inflation target's 2%. Now, we're not there yet, but we're close enough that the Fed can actually start easing off that brake pedal a little bit. A big driver of this improvement is actually housing or shelter inflation, actually. And that makes up roughly about 35% of the overall index. Rent growth is slowed pretty darn sharply the last few months, and new lease data shows year over year increase now under 3% nationally. So when that actually filters completely into CPI, we'll probably see some additional cooling of the core CPI. Now, energy costs, they did spike a bit from gas prices, but those are pretty volatile. And the underlying trend is kind of a flattening trend with prices. So, what's the Fed thinking? Well, they already cut rate once in September, and they're widely expected to cut another 25 basis points at the meeting on Wednesday. Now, that would bring the federal funds rate down to around 4.75%. It's still restrictive, but it's definitely moving towards a more neutral position. Now, here's the balancing act that the Fed's dealing with. If you cut the Fed rate too much, inflation, boy, it could flare up again out of nowhere. If you don't cut it enough, the economy could stall and fall flat on its face. So, recent Fed commentary shows that they're comfortable taking small bites rather than big chunks. Quarter point moves, more data dependent with each step. Now, if Wednesday's statement leans dovish, meaning that they emphasize easing inflation and a softer labor market, we could see bond yields slip lower, which would then pull mortgage rates right along with them. But if Fed Chair Powell sounds cautious or signals a pause, the market could unwind some of the recent gains, push rates a tad higher, yeah, that's right. They could still go up. So this is part of what's making it really difficult for a lot of folks considering refinances right now. The answer as to whether or not they should pull the trigger, it's different for everyone. So everybody's going to have their own personal circumstance, and you want to reach out to a certified mortgage advisor who can kind of hold your hand, not just with the right rate, but also the right strategy to help you make the right decision. So now into real estate. Existing home sales rose 1.5% month to month and 4.1% year over year. Now, that might sound modest, but it's a really big deal because these closings reflect contracts that were written in July and August when rates were still considerably higher. Inventory is improving at 1.55 million units. That matches a 5 year high. And that's good for buyers who've been really frustrated by tight supply. But remember, before the 2008 crash, we had over 5 million homes on the market. Now, today, we've got about a third of that and 30 million more Americans. That should support values in most markets for years to come. And that alone should put the bubble burst talk to bed, again, in most markets. Now, if the majority of US markets, they don't have too many homes, they've got too few. And with builders still catching up from a decade of under construction, demand continues to outpace supply. Now, as rates ease and affordability improves, we could see pent up demand from renters and move up buyers unlock heading into winter. Think of it like this: it's kind of like the market slowly thawing after 2 years of being frozen by high rates. Now, the National Association of Realtors, or NAR, their chief economist, Lawrence Yun, summed it up pretty darn good. He said, falling mortgage rates are breathing life back into the housing market. So today, stocks are up. Bonds started the day down a little bit, but are now up about 4 basis points. So slightly higher to start the week if they hold on. Now, the stock market bounce is largely due to optimism around a potential U.S. China trade framework. Treasury Secretary Scott Bessent said negotiators have a very successful framework ready for the leaders later on this week, one that actually removes the 100% tariff threat and restarts China's soybean purchases with the U.S. The Chicago Fed's labor market indicator shows unemployment likely ticking from 4.3 to maybe 4.4%, signaling slower hiring and a few more layoffs. And this lines up with what we're seeing in payroll data. Job openings are shrinking and wage growth is kind of flattening. Now, meanwhile, the ICE mortgage performance report, it shows delinquencies at 3.42%. That's down 6 basis points year over year and about 58 basis points below 2019. Now, foreclosures have risen about 23% versus last year, but they're still 18% below pre pandemic norms, meaning that borrowers are still paying on time and overall credit quality remains pretty strong. Now, this combination, stable employment, solid credit, improving inflation, it's exactly the cocktail that the Fed wants before moving to a little bit more of an aggressive position. Now, mortgage bonds continue to trade in a narrow channel. There's support at the 25-day moving average and resistance around 101.31. They've tested that ceiling multiple times, but haven't broken through it in any kind of a meaningful way. Now, that tells us traders are waiting for the Fed's announcement before they really pick a direction. Now, on the Treasury side, the 10-year yield, it's flirting with that psychological 4% line. Stay below 4%, and we could drift towards 3.92 or even 3.8. But if we break above and 4.8 becomes the next resistance, which would likely nudge mortgage rates higher again, yeah, I just said the quiet part out loud, didn't I? We may not be out of this cycle yet. So far, money managers are positioning lightly ahead of this meeting, meaning that volatility could spike a little bit midweek once we get the Fed press conference. All right, let's talk strategy for a little bit. Now, most analysts, including three-time Crystal Ball Award recipient Barry Habib, they recommend floating into the Fed meeting since there's potential for a favorable move if the Fed confirms another cut. Now, that said, volatility risk is high. So if you're within 15 days of closing and have little risk tolerance, you might want to go ahead and lock. Protect your deal, protect your sanity. There's likely going to be a refinance opportunity coming for you in the next year or so. So it's probably not as big of a deal as you might be thinking. Now, if you're closing 30 or 60 days or more out, it's reasonable to go ahead and float, but stay nimble. Make sure that you're getting advice from a certified mortgage advisor or somebody who knows the market really well. The moment the Fed statement hits, we could see pricing shift by an eighth or a quarter almost immediately. Now, I'll post real time rate alerts if we have alerts to lock on the Shoemaker Loan Team Facebook page. And if you want to be added to a text list for live lock notifications, just shoot me a message at 618-795-0790. So here's this week's playbook: lock if you're close to closing, if you've got low risk tolerance, float if you've got some time and a strong stomach. Don't go dark. Make sure you stay plugged in, and we'll keep you ahead of the market. All right, time to shift gears a little bit for a second. If you've been carving pumpkins for Halloween, don't throw away the seeds. This week's family hack of the week is cinnamon sugar pumpkin seeds, a super easy fall snack that both big and little kids are going to enjoy making and eating. So, check out the full details in the description down below. So, that's your update for the week. Inflation's easing, housing stabilizing, and all eyes are on the Fed this Wednesday. Now, if you found this information helpful, please hit that like button, subscribe to the channel, and share it with somebody who could use some good, honest advice. And if there's a topic you'd like me to cover that I haven't already, drop that down in the comments. And don't forget, if you're military, law enforcement, or a firefighter, the Shoemaker Loan Team and Homestead Financial Mortgage, we've got some great programs, some great savings through the Home Foundation. Reach out today and learn more, or if you'd like to be part of the team that serves our local heroes, we'd love to hear from you too. I'm Doug Shoemaker with the Shoemaker Loan Team, helping you make smarter mortgage decisions with less stress and a little bit more fun. I'll see you next week.